What's up everyone, Shankar Puri here, and today we're going to do a gold breakdown so you can see how you can still profit in the market even though it's been on a downturn. We've experienced a lot of volatility in the crypto market, in commodities, indices, but you can always make money. Just remember, volatility is what we need as investors and traders to make a profit. So today we're going to go through gold, and I'm going to show you exactly how I broke down this chart so you can implement this in your day-to-day trading style as well. So without further ado, let's dive in. All right. So yeah, today we're going to look at gold. Just going to kind of show you what we were looking at and how I was able to capitalize on this trade. So you can see here, this trade was right here. Risk to reward is 2.78. So what I like to say is you always want to make sure your risk to reward is at least 1-to-1, at least. You know what I mean? I like to go for 2-to-1s, or take 50% at 1-to-1 and then let the rest ride to take profit. So that's something that I do often, but you want to at least make sure your reward is on par at minimum with your risk. And if your risk to reward is 1-to-1, then you'd have to have a higher win rate. You know what I mean? So keep that in mind. So what we see over here is gold. So we're on the 1 hour time frame. So yeah, we'll just take a nice little 1 hour time frame. Just take this off. So we were in a downtrend. Where is this? Where is this? Oh, can't find it. Oh yeah, okay. So you can see we're in a downtrend. Had a bit of consolidation, but overall in a downtrend. Right? Hold up. So in this downtrend, and then we got down to this low here, and this is a support area, and we broke above the previous high. So we broke above the previous high, and when you break above the previous high, does not necessarily mean we are in an uptrend. How I determine if we are in an uptrend is if, one, we break the previous high, so we did, but we also maintain a higher low, so which we did. So we made a higher low than this low over here. So it shows me that we are in an uptrend. And again, we are as well above the moving average that I have here, if you guys like to use moving averages. So if we're looking at the chart, okay, now we're in an uptrend. Price is moving up. So what did I do to analyze and capitalize on this trade? Oh, shit. Okay, I see we're on an uptrend. I drew my trend line or counter trend line. Yeah, I drew my trend line here. So from point A to B, so point A and point B right here. You can see right here, so that's point B. And I also drew my Fibonacci's from the low, so the previous low, to the next high, so right here. So what I was looking for was price to come down to this area over here. So let me see if let me just hide this for a minute. Okay, let me hide that for a minute. So I was waiting for the price. So if we kind of replay this a little bit, I was actually waiting for the price to come down into this area over here before to take this trade, right? So I was waiting for it to come down here. So if we play it, price comes down, right? And then it hit my take profit. But what I wanted to show you guys too is, go back, close that, is that though the price did not come all the way down here to my Fibonacci 61.8, we did come down to the 50% and touch this support zone, which was previously resistance. And as well as if we zoom into the chart here, on the 15 minute, so this is where you use time frame correlation, is I could see that on the 15 minute we have bullish candles right here forming, giving me confidence to enter the trade. Make that green. 15 minute, and if we look on the 5 minute, you can see we formed a double bottom. So as I'm as well looking for the price to come down here, I'm also mindful of how is the price on smaller time frames looking. So we have a bullish engulfing candle here, we have a bullish candle here, as well as a double bottom, right? So we have this double bottom. Where's the brush here? This double bottom right here, as well as a bullish candle. So it gave me the confidence to actually enter. So when we were experiencing a pullback on this candle, I entered on this candle here during the pullback, you know, and then I was in a bit of drawdown for a little bit, and then the price pushed and hit our targets, right? So I did take, like I said, you know, sometimes I take 50% off at 1-to-1, so I did take 50% off at the 23.6 Fibonacci, and then let the rest ride to take profit, right? So I mean, that is the gold trade, and you can see the breakdown, very quick, simple. You know, you don't have to spend hours and hours on the chart, but you do need to spend hours and hours on the chart to perfect the craft, right? Sometimes in the day the trade will just show up. Sometimes it will take a couple hours for the trade to show up, but either way, you know, you got to stay patient. You got to see what zones are you looking for, right? So, and when to actually look for candlestick patterns, because you know, over here I'm not really looking at candlestick patterns to enter a trade because we're in consolidation, right? I'm not really looking for that. Now if we break the consolidation, so if we break this area, then I may look for something. So this candle will push down, could be an area to enter, but during the consolidation periods, I'm not really looking for areas to I'm not looking at candlestick patterns. Up here I'm looking for candlestick patterns because we are at resistance, so I'm looking at the candlestick pattern. Okay, we got a rejection, you know what I mean? So just keep that in mind, is that you need to implement, you need to understand how the charts work, understand the language, and know when to implement what tool at what time. And you know what I mean? So we saw this break of structure over here, but I wasn't entering anything over here, just indicating to me that we are in an uptrend once we broke this high and then made a higher low, right? So up here, came back up. I'm looking for higher highs now. I'm looking for a bullish move above the moving average. Everything's looking bullish, so I did take a long, right? So that's why. But analyze all of this over here, and then you come into the smaller time frames to kind of say, okay, we know where the trend is going, we know where everything's going, so let's zoom in and see how the candlesticks are forming, how the patterns are forming, and then boom, you enter your trade. Now stop loss, where's the measurement tool? Actually, let me just shift here. So stop loss, normally about 30 pips for me on gold. That's normally how I leave it. You know what I mean? Or I just put my stop loss below the previous candle low, so you can see that whenever on an uptrend, the wicks don't normally go far below the candle. So you can see here, barely went below, didn't go below, still maintained, didn't go below this one, pushed a bit below this one, and kept up. So I normally sometimes put my wicks, my stop loss below the wick of the candle that I entered, depending. So you can definitely look at that, see how it works for you. But yeah, so that's really it, guys. Just want to show you how you can capitalize every day in the market. But remember, psychology is key. Fear, greed, and all these things, especially when you start in the market, it's definitely going to overcome you, and it's natural. You know, just anticipate that you'll be clear of mind, and then when you put money in the market, everything just breaks loose, and all your thought process just go out the window at the beginning. And it's a necessary process for you to go through so you can eradicate yourself from just all these emotions, that normally would come into play. And that does come into play when you're beginning. You're really learning how to train your mind to be a trader, to look at money differently as a trader would, and kind of have a different association with money than an average person would. And to grow to that capacity as an individual, you gotta go through a little pain, right? And it's necessary. And if you're going through the pain, embrace it, because it just means you're getting better, right? So trading, you can always make money as long as volatility is there. Don't be scared by the news or whatever. Just keep plugging away day by day, and you'll eventually get the hang of it. All right, so thank you so much for watching. Keep the content coming. I'll also update you on Bitcoin, altcoins, what's going on with that, so you can stay informed. And just don't have fear and FOMO while watching these videos. Just give you a straightforward analysis of what I believe will be happening, but always be an independent thinker and make your own decisions, because that will always be the best decision. Whether you're right or wrong, you'll always learn from it. All right, so take care.